Today, we are building a launch pad, not for a rocket, but for price. We're going to dive deep into one of ICT's most powerful concepts for finding incredibly precise, explosive entries. Hey everyone, welcome to AI Explains ICT. In this video, we are breaking down the core content from Month 4, Episode 8. Seriously, you might want to grab a notepad for this one because we are covering one of the absolute strongest types of order blocks out there, the propulsion block. So, let me just ask you. Are you on the hunt for those picture-perfect trades? You know, the ones that have immediate, explosive reactions, and best of all, incredibly tight risk? If you're nodding your head yes, well, you are in the right place. Okay, so let's get into the blueprint for this launch. What in the world is a propulsion block? And why is it so darn effective? To put it simply, a propulsion block is just a candle that trades back into a prior order block. And when it does that, it kind of takes over the job from that original block, becoming a brand new and way more sensitive level of support or resistance. ICT has a really great analogy for this. I want you to think of it like building a new launch pad directly on top of an old one. The first order block is your foundation, sure, but this new propulsion block is a higher, more powerful platform just waiting to send price flying. So, what's the secret sauce here? What makes these so special? Well, first, it inherits its strength from that prior order block, so it's not just some random level. It also creates a new, more refined level of support or resistance. Because of this, it is extremely sensitive to retests. But here's the most important rule, the one you can't forget. Price should absolutely not violate its mean threshold. That's the halfway point of the candle's body, and it's your line in the sand. All right, theory is great, but let's see this thing in the wild. We're going to look at a real chart and see how this plays out in a bullish scenario, step by step. Step 1, as always, is context. Where are we in the grand scheme of things? As you can see here, price is clearly on the buy side of the curve. It's already made a low, and the trend is up. That tells us our focus should be entirely on looking for a reason to go long. Okay, step 2. We have to find our foundation, that initial order block. Now notice how ICT groups these 3 down candles together. He doesn't just look at one, he treats this whole little area as the first bullish order block. That's our initial launch pad. And here it is, the magic moment, step 3. You see this next down candle right here? It trades right back into that group of down candles we just marked out. Because it's a new down candle trading into a previous bullish order block, all within a bullish context, bam! That becomes our propulsion block. It's the new super sensitive level we've been waiting for. So, the million-dollar question, how do we trade it? Well, the entry happens when price comes back and retests the high of that propulsion block. And the reaction? It should be fast. According to ICT, you're looking for a sudden, maybe even a violent move away from that level. That instant feedback is what tells you the setup is the real deal. All right, so that's the bullish liftoff. But what's so cool about this concept is that it works perfectly in reverse. So let's flip the script and look at a bearish reentry using the exact same logic. The setup is just a mirror image. First, we find a prior bearish order block. Then, we watch as this up candle here trades back into it. This candle right here becomes our bearish propulsion candle. It's now the new high-powered resistance level. And now, let's watch the reaction. Price rallies back up to retest the low of that propulsion block. And look at this. It barely even has to touch it. It just tags the low and gets immediately and forcefully rejected. That's that hair trigger sensitivity we want to see, propelling price lower. So let's just boil it all down to make it super simple. For a bullish setup, you're looking for a down candle trading into a previous bullish block, and your entry is sensitive at the high. For a bearish setup, you're looking for an up candle into a previous bearish block, and the entry is sensitive at the low. The logic is identical, just flipped upside down. Okay, let's bring this all home. How can you take this concept and make it a real, tangible part of your trading edge? Here's your 5-step playbook. 1. Always, identify the market context first. Are we bullish or bearish? 2. Find that initial valid order block. 3. Spot the new candle trading into it. That's your propulsion block. 4. Get ready to anticipate that highly sensitive retest for your entry. And 5, the most important part, use the mean threshold as your invalidation point. If price breaks that, the idea is wrong and you get out. And really, it all comes down to this quote from ICT himself. It propels price quickly and suddenly, and it gives you immediate feedback. I mean, isn't that what we're all looking for? Quick confirmation and minimal time sitting in drawdown.
So I'll leave you with this question to think about. Knowing just how sensitive these levels are, how could using the mean threshold of a propulsion block as your hard stop dramatically tighten up your risk management and completely change your risk to reward potential?
Hey, if you found this breakdown useful, do me a favor and hit that like button, and subscribe for more deep dives into ICT's content. And if you have any questions at all, drop them in the comments below and a real human will get back to you. As always, safe trading out there.